Welcome to the REI Hacker Podcast, where we unlock the secrets of real estate success. Join us as we dive into the journeys of top investors, mentors, and industry experts. And now, let's hand it off to our host, Benson Juarez.
Welcome, everybody. Thank you so much for being here on this edition of the REI Hacker Podcast. So excited for my next guest. His name's Corey Geary. Corey is a real estate and crypto entrepreneur. He's the founder of the Novation Nation and the DeFi Crypto Alliance. He's completed over 1,000 real estate deals and is now spending much of his time in Puerto Rico, being on the cutting edge of the crypto world. Thank you so much, Corey, for taking the time and being with us today. I really appreciate it.
Absolutely, Benson. Appreciate you having me here, man. Truly blessed and honored to be here with you today. Thank you.
Thank you so much. I mean, I've only known you for maybe 3 years, going on 3 years, being part of the family mastermind.
Yeah.
And I mean, even in that short time period, what you're working on in your career has evolved by leaps and bounds.
It is.
Right. And so you started off in kind of the normal real estate world doing wholesaling and, really, setting yourself up for success, just understanding real estate and getting deals done. And then kind of morphed into doing some innovations and some other kind of creative type deals. And now you're spending a lot of your time doing crypto, and I'm excited to learn about that, but I want to wait until we get there to set it up for the audience here about, like, where did you start? How did you get where you're at? And what was it like?
Great question, man. I got an entrepreneurship, I think, a little on the later side of my life. I was 38, 37 when I got into entrepreneurship. And man, I was working in the casino industry. I was, an alcoholic, a drug addict. I mean, I was going nowhere fast, but really to my deathbed. I was single, living the rock and roll lifestyle, like how I was living my life. And literally, I used to watch that show Flip or Flop with Tarek Al-Moussa. Most people know that show. Yeah. And I had some money being saved up in my bank account because I did have a good job. The casino industry pays well because it tips. And my girlfriend at the time would always be like, hey, why don't you flip a house so I can list it? You'd see these guys make $80,000, $60,000 in like 20 minutes. You're like, oh, why don't I flip a house so I can list it? And that was how the first thought in my head of getting the real estate. That was kind of like the indoctrination. And then one day I was running around the neighborhood and I saw one of those bandit signs. It said fix and flip, buy price, had a number, ARV, and had a phone number. And I called that number, I bought that house, and on that first deal, I made $6,000. It took me 6 months too. And that was my introduction into real estate. And even though I had a very toxic lifestyle, and I'm a faith-based person. I believe in God. He guides me in certain directions for certain things. At that point, I thought I was chasing the dollar, but what he was doing is he was guiding me to save my life because I was going nowhere fast. And how did the real estate and entrepreneurship save my life? Because it forced me in rooms with people like yourself who are looking to get better spiritually, mentally, physically, and financially, right? Because that was the initial carrot I was chasing. But all those other things came with that package. And I didn't know at the time that's what was going to happen to me or be part of my journey. But that's how it unfolded. And so now I'm truly blessed to say that, I've been sober for multiple years. I have a beautiful family. I have 2 wonderful daughters, my youngest being 3. She's like my absolute heart. And I live in Puerto Rico. And that would have never happened. And that, if I went for my entrepreneurship journey, that's due to real estate, getting into that space. And that was about a decade ago. And I at first, like you said, it was fix and flipping, which I failed miserably at because I lost a bunch of money. It forced me into wholesaling. I was wholesaling for a while. And I don't know if you remember when it became cool to do this nationwide wholesaling business. It was roughly
virtual
about
wholesaling.
Yes. And before everybody was like, oh, don't leave your backyard, do local deals. And then all of a sudden everyone was doing these virtual. One of my buddy, Nick Nick Perry's the one who first was kind of pioneering that. And then Sean Terry came out and did it. And I was like, okay, well, I'm going to do that. And, like everything in my life, I jump in head first without like trying to, figure it out or get proper mentorship. And that hurt. I almost put me out of business, and it created a pain point in my business though, where I had all these deals and I couldn't sell them. Like it was nationwide, and I was doing fine locally. I just wanted to scale, and I thought that was the way. And I was in a mastermind, and a guy was presenting on novations. And I was like, what the heck is this novation thing? And he goes into like, he lists these properties on the MLS to conventional finance buyers. I was like, holy crap, if I could figure out how to sell my deals to conventional finance buyers, I could do that nationwide. And there was my problem solved, right? Well, I went home. And, I put it into practice, obviously failed miserably for like the first 6 months. I mean, it was not easy to do that nationwide. I had to get multiple attorneys involved to redraft up the paperwork to make it very nationwide friendly to keep these deals from falling apart. It took a lot of different like restructuring the novation process to be able to do it nationwide. And it worked after a period of time, and we got really good at it. And so at the end of my real estate journey, we were doing anywhere from 30 to 60 deals at any given time. I had a team of about 17 people. We were making millions of dollars every single year. I had created the Novation Nation, not only the course, but we had a mastermind that revolved around it. So people wanted to come in and learn how to do not only virtual wholesaling, but virtual novations. Then that's what the mastermind was for. And it was great, man. It was probably the pinnacle of my real estate success for sure. And, but I was working 15, 16, 7 hours a day. At any given time, I was in multiple lawsuits. I had a lawsuit going on with the attorney general at that time. And what I realized in 2022 is that I built this kind of small empire. I was making a lot of money, but I built a 7-figure prison. I was in this prison, and this business owned me. I even did the COO route for a while, and that, I had to manage her, and then we had to fire her. I was like, it was this constant, like, just hamster wheel. It was great, but I didn't have any freedom whatsoever. And at that time, I was reading the book, The Untethered Soul by Michael Singer. Great book, man. If you or your listeners have never read it, I highly recommend it if you're an entrepreneur. And what it teaches you is how to stop clawing your way in life to success, and start letting God guide you in your life to success, and start tuning into the clues that he's given you in your dreams, through your dreams. And it's an amazing, impactful book, man. In fact, I was so moved by it that I flew to Florida. I was in Arizona at the time. I flew to Florida. He has a temple out there. I went out there and meditated with him for the day, talked to a lot of his students, really went on a soul searching journey to realize that I was completely miserable in real estate. Even though he did a lot of great things for me, there was another iteration for me beyond that. At the time, I didn't know what it was. But I knew that there was something else beyond what I was trying to do. And I knew I was in the wrong vehicle at the time. And it was great. It was a great vehicle. I tell everybody, real estate and entrepreneurship saved my life. It did. Like I said, I wouldn't be where I'm at today if it weren't for that. I mean, that was, my life is so freaking amazing right now. And I'm blessed every day I wake up and I'm like, oh my gosh, I'm so blessed. The life is so wonderful. And it was all because I wanted to chase the dollar. I was like wanting to make more money. I was like, I want more money. And it's funny how God has mysterious ways of working. And the same with the crypto stuff. I like every entrepreneur, we have shiny object syndrome. We go out and we do other businesses. We do other investments. I tried e-commerce for a while, failed miserably. That was a nightmare. In fact, when all those job shipping stores were going up in flames, Like I just started doing that type of business like a few months prior, and I had to shut it down because I knew it was all going to hell. I was like, oh my gosh, I'm not getting involved in this thing. And but I was also dabbling with crypto. I would just go in and kind of treat it like a casino, throw money around, and I felt like there was something that kept calling me to that asset class to invest more, look more into it. I started hearing things, when I was doing research on it. Like, for example, did you know from 2020 and beyond, there's more millionaires and billionaires created in cryptocurrency than any other asset class in the world, including real estate? Most people don't know that.
I believe it. It makes perfect
it,
sense.
Yeah, another fun fact. Cryptocurrency is the highest appreciating asset class known to mankind. If you were to put $1 into Bitcoin in 2009 when it first came out, now I get it. Most of us didn't know it was there, but this is a fun experiment. And you would have sold the last local top, you would have made over $7 million off your $1. It's wild. It's so insane. And I knew, like, I'm a big believer of what's his name, Ed Milet, in being the one. I don't know if you've heard that speech that he gives. It's a great speech in his book. Yeah. I love Ed Milet, and he talks about he's the one in his family chosen by God to break the chains of mediocrity and to give legacy wealth down to his family lineage. He's the one, the difference maker in his family. I believe I'm that person for mine, and that's the journey I'm on. And I knew real estate, the vehicle I was in, it was too slow and it was not going to get me where I wanted or needed to go. And I wanted also time freedom, and I didn't have that. And I thought to myself, what would happen if I put the 10,000 hours in that I put in the real estate over here? And I'm doing good in real estate. It was great. What if I put that time and energy over here, where this is a much faster asset class, making more millionaires and billionaires? I'm like, I wonder what would happen. By the end of 2022, I was making so much in passive income that my real estate business, the net, not gross, but net, it paled in comparison to the passive income I was making in crypto. And that's when I made the decision to shut the company down. I picked up my family. I moved to Puerto Rico, went all in on crypto, and haven't looked back. And it's been the best decision I ever made in my life. I have true time freedom now to do what I want, with who I want, which is always my family. And I, have more money than I've ever had in my entire life, which is absolutely amazing. And right now the timing is really, really cool. Like we're getting heated up right in the beginning of the bull run here. So we actually grew a community around it. Because when I left, here's how it happened. Because when I left real estate, like everyone's like, well, Corey, what are you doing? Are you crazy? Like, you're gonna go do this crypto thing? Like, I don't understand. Like, are you not making money, or like what? People were very confused, and I wound my mastermind down. Like, I'm not going to be teaching novations if I'm not doing them. Like, I was like, I'm not going to be that guy. I was like, okay, guys, I'm winding this down. I'm done. They're like, oh my gosh, well, teach us what you know or what you're doing. I'm like, I don't want to do that. I don't know if I want to teach this stuff, what I'm doing. And at first I didn't, and I had a lot of people reaching out to me, and I was just doing the crypto thing. And I had a buddy, his name is Dane. I met him through real estate, also in a mastermind, known him for like a decade. And he had kind of similar stories. He's got a different background. Like he's not a recovering drug addict or anything like that, but we had similar stories where he ended up winding his real estate business down a year prior of me. And he was already teaching a handful of real estate entrepreneurs about this crazy crypto thing. And I was like, and he calls me one day, and we always talk, and he's like, Corey, he says, just come on board, man. Let's do it. Let's teach these guys to have a little bit of exposure, just a little bit. They don't have to go all in like us, and to have some diversification and have some passive income, true passive income, to make their entrepreneurship journeys a little bit easier. And he convinced me, and I did it. And we went in, and now we have a community of 250 people in our mastermind. We've even teamed up with Robert Allen, the no money down guy from the 1980s and 90s. That's been an awesome journey. And yeah, man, it's grown so much, since then. And it's been just a fun journey, man. I mean, I like I said, every day I wake up, I'm like, I can't believe how blessed I am.
So is your group called the DeFi Crypto Alliance? Is that your
Yep.
community?
That's the mastermind. Yep.
That's amazing. So
Yep.
I love the concept of crypto. I don't have a single dollar in crypto, believe it or not. Right.
Everybody should have at least a smidgen of their portfolio,
Yes.
whether it be 1%, okay, 5%, maybe it's too much, maybe not, like just a little bit. So that way, if things start really taking off, going parabolic, I mean, Benson, right now, politics, this is the first time crypto has ever been brought into politics, and it won. Like
Right.
Donald Trump is beating the drum. I'm going to make Bitcoin our reserve, We're seeing all these other nation states, like Brazil announced today, we're also going to add to our reserve Bitcoin. Like, and you're going to see this massive bidding war. Plus, this is the first time in crypto history where you can get in before Wall Street really starts participating. Right now, they are a little bit. The ETFs just got approved this year for Bitcoin and Ethereum. So literally, this is your first time that you can front run Wall Street and front run the United States government and all the other nation states of the world who will be fighting over this stuff come a year from now. This is a very unique opportunity where, like, even a little bit, like, just go buy a little bit of Ethereum, fine, that's great. It's not what we do. We find new stuff to buy that has the big multiples, but like even just putting a little bit of Ethereum in your portfolio and getting a nice 5, 6, maybe a 15x, who knows, which you can't get. Like, where in the real world can you get a little 10, 15, 20x on your money in 6 months, or so right
There's
now,
nothing. The only thing you can equate that to is investing in like a startup company.
you could do it. And if you're lucky,
And if
right,
you're
with a
lucky, it might
business,
hit. But just
yeah,
like the hedge funds or, the ones that invest in institutional investors, they're always looking, it's like a 10-to-1 or 20-to-1 ratio. Like they
yeah,
think that maybe one's going to hit out of 10 or 20. And so that's how
yep,
they justify dumping in millions into these things, because they're looking for those 10 to 20x multiples.
exactly.
That's the
They only
only
need
thing
the
you can
one to
equate
get
it to.
all those losses back.
Right.
Yeah.
So let's for me, help me understand how crypto can be a business, because I always thought of it as like it's an investment strategy, right? You find it's like I just picture it as like another stock, right? Like you put some money
It's a
into
good
it,
way
you
to
leave it
picture it,
there,
though.
and it's going to go up and go down, and you're playing the long game for the most part, right? So how do you turn that
You are.
into a business where it's paying you today, where you can basically have passive income that outgrows any active income that you could get from a
Oh,
normal
great,
business?
great question. So the passive income strategies in crypto are wild. And I'll break it down for you. It's probably just easiest, just kind of like break it down, and then we can go into the questions afterwards. There's 3 ways of making passive income in crypto. And I'll start with the most conservative. The most conservative way is mining. All mining means is that your computer gets plugged into the blockchain and you're a server, you're part of the blockchain. That's all it means, right? Now, mining Bitcoin is very expensive. It takes a lot of power. You've probably heard that.
Yeah.
It takes a lot of electricity, so it's not profitable anymore for the small guy to mine Bitcoin. But you can mine other layer 1 blockchains and be very profitable and make a lot of money doing so. But all it means is your computer is part of the blockchain. All blockchain is a ledger. It's just an online ledger that information gets, stored in. And once that ledger's full, it gets sealed and it gets pushed down the line, and a new ledger is born. These are called blocks. The block gets full, it gets pushed down the line, and then the new block is made. Well, where are the blocks? Where is the information of the block being made from? That's your computer. Your computer is plugged into the network. It gets to make one of those blocks, and for doing the work, it gets rewarded a piece of the layer 1. So if you're mining Bitcoin, you get paid in Bitcoin. If you're mining Ethereum, you get paid in Ethereum. But your computer does all the work. It's providing a service, but it's getting paid. So that's most conservative, because it's not like crazy APYs. Annual percentage yield is what APY stands for. It's like, you can earn between 5 to 15% annualized when you're mining. Usually it's not very aggressive, but it's nice, consistent. It's very, I would say, safe in the way that you don't have any risk beyond the coins going up and down. That's like your only risk factor of mining. That's why it is so conservative on the
But there's some
payouts.
expenses, right? You have to pay for the server, the
Not
computer, and then
the
the
computer.
power.
No power, only if you're mining Bitcoin. So literally, like,
Mhm.
here's my crypto laptop right here, and I'm mining Pulse Chain on this laptop right now. So the laptop cost me about $800. I plugged into the server. The power that the laptop uses is not very much. I mean, there's a little bit of power there, but it's not, not gonna break the bank or anything. It's
Mhm.
not like Bitcoin. You're not competing with nation states literally on mining this stuff. And it's very affordable, and you're providing a very valuable service. You do have to have a little bit of a little bit of tech skills. Like, I'm not a techie guy at all, but I'm good at copy and pasting. If someone teaches me how to do this, I'll learn. Like, for example, my real estate business, I got pretty good at running Google Ads PPC, being nationwide. I ran my own Google Ads, and I wasn't good at that when I first got into real estate. Someone taught me. Same with this. I joined masterminds. I hired a private mentor. I treated crypto the exact same way I treated real estate. I treat it like a natural asset class, and I want to be able to like be successful at this. So I'm putting the time, energy, and I'm trying to be around people who have bigger portfolios than me. This is how in real estate, you want to be around guys who have bigger portfolios, doing more deals. This is no different. This is
Right.
also another reason why I moved to Puerto Rico, because there's guys out here with, billion-dollar portfolios, and I get to interact with these guys. I get to mingle with these guys. I get to see what their thought process is. What are they thinking the market's doing next? What are they involved in? It's very important to be around people who are a step ahead of you. If you're learning any asset, I would say if you're doing stocks, it's the same thing. But so mining is the most conservative, but maybe the most technical, because you do have to know how to run a server. You got to know Linux.
Mhm.
But copy paste, you can have it up and running in a day, and the computer does all the work. The second is called crypto dividends. Crypto dividends is where, just like Coca-Cola, if you own stock in Coca-Cola, you get paid dividends every quarter from the company. Now, it's not a lot. It's just a dribble to the shareholders, unless you're Warren Buffett and you own half the company like he does. But it's a very small amount because they have to pay, the company gets paid first. Well, in crypto, there are projects on the blockchain where anytime somebody uses that project, they have to pay a fee. And I'll give you an example. So there's a project called Fame on the Pulse Chain blockchain. What it is, it's a leverage trading platform. Now, we don't leverage trade, but other people will. They come in and take a leverage trade. While they're keeping that leverage out, they have to pay a fee by the hour. It's profit. It's profit for that website, that project on the blockchain. Where all of the profits go in crypto, in true crypto, decentralized finance, there's no owners of these things. It's just code. It's code on the blockchain. There's no CEO. There's no management team. So where does that dividends or the profits go? Well, it goes to the community. It goes to us. So if you own the Fame token, it's like owning shares in the Fame company. You stake your Fame token inside the Fame protocol, and you own your share of the profit that the project makes, the protocol, what it makes. It's a dividend. That's all it is. It makes money from people engaging with it, and you get paid for that by owning the token. The third way is the most lucrative and probably the most popular because it is most lucrative. There are other risks associated with that, and I'll talk a little about that, but won't get too deep because it won't confuse your listeners. And that's called liquidity providing. What is that? You've heard of Coinbase, right? Robinhood, Kraken, Binance. In fact, Binance, did you know they make $24 billion a year? It's insane. How do they make that much money? Off of fees. So all they do is offer up Bitcoin, Ethereum, and all these other assets for the marketplace to come in and swap in between. And every swap, there's a fee paid to Binance. Okay. Now, everything we do is directly on the blockchain. We do nothing on centralized exchanges. So where do we buy our assets then? That makes no sense, Corey. How do you go buy, for example, Ethereum if you're not going to buy that on Coinbase? Well, I buy it on the Ethereum network in a decentralized exchange. Decentralized. Well, where does the decentralized exchange get its liquidity or its assets? Us. So as long as I own two assets, I can own Ethereum and say Hex, for example. Hex is another asset that I love. I could put them in a liquidity pool on the Uniswap decentralized exchange on Ethereum. I know it's a mouthful. The marketplace will come trade in between my assets, and I make all the fees. I'm the Coinbase now. I'm the Robinhood. I am the crypto.com. This is a decentralized exchange where the people are the one who are in charge. The people are the ones who get the opportunity, not the big banks, the centralized entities, governments, that we see in everything else in life, right? Cryptocurrency was invented to give power back to the people, to give us the opportunity. And that's where the most money is made in passive income in crypto. So if you're holding assets because you're holding it for speculation and you think the number's going to go up because you're in the middle of the bull run, well, you can go put those in a liquidity pool and have them working for you and make passive income on top of your number go up. It's really wild.
Interesting.
Did that make sense?
Is that something
it was a lot.
It is a lot. And is that what you do all day? Is just go in and monitor these pools? And do you have to watch for ups and downs or anything like that? Or is it like fairly passive once you set it up?
It's fairly passive. So like once you have your portfolio built out and you have your positions and you know where you're providing liquidity, or maybe you got some mining going on, it's very passive unless you want to go in there and participate in some new stuff or change pools or maybe you want to change your tokens that you're invested in, that kind of thing. But for the most part, once your portfolio is set, it's set. We don't day trade. We don't like staring at charts all day. We do understand technical analysis on charts when we're buying. We want to know, are we buying at the right time, or is this an overheated time that we're buying and the market's going to go down? We want to understand that aspect, but we're not trading. We build our portfolio, and then we build our portfolio out in a way that we can just be passive. The only place where I'm not passive is so in our community, we are the ones who are finding new projects, new blockchains, doing all the research and due diligence, integrating in with other communities who understand where the next opportunity's at. And that's kind of our position in the mastermind. But I love that stuff. Like I eat, sleep, and breathe that. It's so much fun. I've never had so much passion in my life doing something like this. And that's what we're doing. So for me, it's not very passive because I'm doing that, if that makes sense.
Yeah. So let's compare two different asset classes. Let's say somebody puts 100 grand into a fund, right? Let's just say it's a multifamily fund, and it's going to double in 5 years, right? That's kind of like the traditional route. 4 to 5 years, you can double your money in like a typical fund.
That's great. That's a great return.
Yeah, right. So let's say that same person puts another 100 grand into this fame pool, okay? Or however you want to define it, right? Maybe give us some more clarity on what they would be investing in.
Yeah, let's break it down. So let's take the most conservative. The most conservative be mining, and you're earning about 15% annualized. So if you had 100 grand, you're going to earn about 15K a year mining, which is not the sexiest thing, but there's almost literally no risk as far as like what we call impermanent loss. I don't want to get too deep in the weeds in that because that's where it can get confusing, but there's no other risk associated except for the tokens going up and down in price. So that's why we like
but even that. So if you compare that to just the stock market, that's 2 or 3 times what the stock market has historically done year over year.
And that's the most conservative. Now let's talk about dividends, where you participate in a project where you're like buying shares in it, and then you're earning, the fees or the profits that it makes, like Fame does. And so 100 grand, and Fame's earning about, I think right now, about 28% annualized. So you make about 28 grand a year, or if you divide that by a month, you're making about $2,333 off 100 grand think about how much real estate you got to buy before you net $2,333 a month. That's net, right? That's what goes into either your crypto portfolio, or you could put it right in your bank account every single month. And so that's off 100 grand if you put it in Fame. Let's take liquidity providing. Liquidity providing. Now, there's some risk associated with liquidity providing. That's where I don't want to get too deep today, because we could have a whole podcast in that part. But that's where we come in and we teach and educate on those risks and how to manage it. Make sure you're holding the right coins, ones that move together, because you have to provide liquidity with 2 coins. And that's the tricky part. But let's say on 100 grand, I would say average right now on my portfolio, I'm making about 60% APY on my liquidity providing. So that is 60 grand a year. Or if you break it up on a monthly, what is that? 60, that'd be 5K a month on 100 grand. And that's roughly what the average liquidity provider makes. It's bonkers. Now, there's other circumstances where it gets really crazy. Now, this didn't happen to me. It happened to Dane. He was able to be on the ground floor on a new project that was launching. It was more like a dividend type project, but he was one of the first ones that was able to participate. So the pool was very small of investors. So, obviously, like anything else, with the investors grow, the pool that your dividends is going to shrink. But he invested in the 100 grand into that project. He was making 50 grand a month for like 5 months. It was, wow. That wasn't me. That was bonkers. The most I've ever made is around 20 a month out of one project that I was invested in. But still, even 5K a month is, how much real estate do you have to own? How many doors do you have to own before you're making 5K a month net? It's net. A lot.
That's the key, is net, right?
It's because the net.
You got debt service with a mortgage that you have to pay every month. When you do real estate, there's always going to be, the leverage is where the majority of that revenue goes.
Right. Now, one could argue, Benson, that someone could say, okay, well, you had to buy the assets for the liquidity providing. So like, if you have 100 grand, so maybe I bought 50 grand of Ethereum, and then I bought 50 grand of Hex. And so someone might say, well, you're not making any passive income until you're made whole off of that 100 grand. Not really, because I can always pull that liquidity out whenever I want and sell said assets. But someone might have the train of thought like, well, I want my 100 grand back before I'm considering it to be, and you could think that way, and that's fine. But remember, you have access to those assets whenever you want them. You can go and pull them out. So,
and that's another fear that people have with crypto, is how do you get that liquidity? How do you get access to that so you can go spend it? Now, things have changed, recently, where you can actually buy stuff now with crypto, right? And that wasn't a thing many years ago. You had to exchange it for dollars. But is it simple to get access to that liquidity? Do you have to go and sell it, or can you borrow against it? Can I get a loan against my assets that are just sitting earning money?
You sure can. You can do both. And so, for example, there's a project, or we call them protocols. So the protocol on Pulse Chain, which is a brand new blockchain. It's been out for a year. We like new stuff because
is that the shirt you're wearing?
Yep, that's Pulse Chain. That's Pulse Chain. We are very yes. It's never seen a bull run, and the average blockchain does a 500x in its first bull run.
Wow.
What will Pulse Chain do? I don't know. Even if it doesn't hit those expectations, I'll be good. But there's a project on there that you could go and put your Pulse. Pulse is the layer 1, kind of how Ethereum is or ETH is for Ethereum. You can go put your Pulse in what's called a vault and take a loan against that Pulse. You can use your Pulse's leverage. You could go and buy more assets with that. Or if you want to go and provide liquidity, like you could take leverage out on your position, or you could take that loan, turn it into stable coin, send it to a money transmitter or an exchange, and wire it into your bank. So that way you pulled money out of the crypto space. You still have your principal. You took a loan, and then maybe you go, I don't know, maybe you go buy real estate with it. You can absolutely do that. And now you've leveraged this asset for this asset, just how we do in the real world, the exact same way. And getting in and out of the blockchain is very easy. So I can get money in for about maybe 2 hours. I'm at mercy of the wire. If I go initiate a wire right now, Actually, today we're almost at the wire cutoff time. It'll go tomorrow. So say tomorrow morning, I would initiate a wire. I can have it on the blockchain in about 2 hours, and I'll be transacting with that money. And same way backwards too. Like it's very easy. You just sell your crypto into stablecoin. You put stablecoin into, like I said earlier, a money transmitter or a centralized exchange, and you turn it there into fiat, which is our paper dollars that we put in the bank, and then we wire it back into the bank account. And I can be back in my bank in about 2 to 3 hours, the other way too, at any given time. So I always have access, or I'm always really close to be able to get that liquidity if I needed it. Now, I always leave enough cash in the bank account where, like, even if an emergency were to happen and I had to take, God forbid, there was like, I had to go to the hospital or something and I had to pay a bill, like I have money. You don't want to like you never want to put yourself in a place where you have no liquidity in your life, like anything else. It's like you want to be responsible with this stuff. But I can get access to it if I really need it.
So let's talk about some of these other projects that are coming up, these other coins.
Yep.
You mentioned a couple of different names that, you mentioned Fame, you mentioned Pulse Coin. I've heard of something
Pulse
called
chain.
Alemio. Like what are all of these different coins and these different, I guess projects that are out there? Can you kind of give us some clarity on what's happening here? Like if there's all these different ones, like hundreds, thousands of different coins.
Millions of different coins. Now, most of them are garbage. Like I think the Solana network literally has 1 million coins launching every single week, and 99% of them are trash, complete trash. So we don't participate on Solana because there's too much garbage over there. That's where all the scammers are at. That's where all the rug pulls are at. Rug pull means that when you buy something, they pull the liquidity and you lose all your money. And so you have to be very careful, because where there's great opportunity, that also means there's a lot of scammers. That's just nature of the beast.
The more opportunity, the more risk.
More risk. And crypto is not very regulated at this point. Now they're working on that. They are going to be putting some good regulation as far as Trump is concerned. Now, what we had going on before with Gary Gensler was horrible, but they got some good stuff coming on the horizon, which is what we need. But you have all kinds of different use cases for this stuff. I'll give you another instance. Hex. Hex is a great one. Hex is a store of value that works like a CD. Just like when you go to your bank and you say, hey, I want to earn some interest on this money, they're gonna be like, okay, you can put in a savings account and earn a dribble, or you can lock it up for 1, 5, or 10 years and we'll pay you X amount of yield on that money. And Hex works exactly the same way, where you could go in and you choose the lockup period that you want to lock your Hex up. And while the Hex is locked up, you're essentially virtually lending to other community members. They can go do whatever they want with that. And you're earning an interest depending how long you locked it for. The longer, it's like anything else, the longer you lock it for, the more interest you earn. But you can lock it for a day. If you're like, hey, I want to go try this out and see what happens, play with it. But it's a great place to go and just earn a little bit of interest, store your value there, and it works like a CD, like a certificate of deposit on the blockchain. In fact, the longest you can lock is 15 years. And I created a couple of those for my daughter, who's 3. I'm like, okay, well, you're 3, and when you turn 18, you'll have these come due. We'll see what they're worth. If they're not worth anything, great. If they're worth something, it could be pretty impactful. So it's a good thing. That's what the 15-year lock's really good for. But that's one use case instance. Now, when you're thinking about use cases, crypto has not evolved past the use cases inside the virtual blockchain system. Outside, like in the real world, we have not completely put like 1 + 1 together yet. Like people are like, oh, crypto will change the world where like you could have title on the blockchain and you can put all your title there, and it's, yeah, but you still need a human in between to record all the title stuff on the blockchain. And it's just going to be, the human is the problem. I feel like with AI and the evolution of AI, we will see crypto and AI come together, and we'll have a lot more real world use case for crypto and blockchain. The problem is right now, like I said, you still have a human interaction. And the whole point is to get rid of the human. Humans make mistakes, and we have to get rid of that part, because once something's recorded on the blockchain or the blockchain is used for something, you can't go back and like correct it. It's like, it's etched there forever. And so we have to make sure it's perfect. And that's part of the problem why we don't see real world use case yet. But anything you could do on like the stock market, like with derivatives, leverage trading, like all that stuff's in crypto, and you have those type of use cases. So any kind of financial instruments, bonds, stuff like that, all that is already in the blockchain, and you can participate inside the crypto space with. It's just the real world stuff, not quite yet. Like we have NFTs that are connected to like apartment buildings, stuff like that. But like, I want to talk
about that for a second. So there's this concept of tokenization of real assets.
Yep.
And you hear a lot about it in the syndication world, where you're going to raise money to go buy a multifamily property. And instead of going and doing like a standard syndication deal, you're going to go and you're going to basically tokenize a building and sell fractional ownership. Is that close?
It's close and being done. It's not perfect yet, but it's being done, and it will be. I think over the next 2, 3, 5 years, it will get to a point where it's perfect. And I'll give you the problem it solves, the biggest problem that it solves. When you're a syndicator or you're somebody who's wanting to raise money for an apartment complex, you got to go out and find that money, and you got to have a pitch deck, and you got to be selling yourself, and you need to raise that money. And some of these guys are really good at it. We were part of the Tim Brott's Legacy Wealth Mastermind, and man, those guys are really good at raising money for deals. But think about if you didn't have that problem, the money problem. There is trillions of dollars in crypto worldwide that you could tap into, and these investors are not sophisticated. These guys have no clue on how real estate works, or a lot of these guys are wealthy. Like, I'll give you an example. I have my buddy out here in Puerto Rico. He invested in Ethereum and back in 2014. He's worth $250 million. He doesn't own any businesses. He's never done any real estate. And he tells me all the time, like, Corey, I should be in real estate. Can you help me? There's a big disconnect, but real estate guys don't realize how much money is over in the crypto space. You can literally post your deal on the internet and raise it on the blockchain. Now you're raising money worldwide, and you're never going to need a bank. You're never going to need to go and do these private like lenders and do all these like crazy events trying to raise the money. You'd have the liquidity almost instantly if you position it the right way and you have the right advertising. I mean, there's so much money over in the crypto space that people don't realize it. They just don't. And especially now that we're kind of entering the bull run, there's a lot of investors, like they don't have no idea what to do after they make all that money. Like they cash out $5 million, $10 million, $20 million, and they just put it in their bank waiting for the next crypto cycle to bottom, which is years away. Where in the meantime, they should be investing in real world assets while the bear market's happening in crypto. That's the time to go into real estate. When the bull market's happening in crypto, you pull everything out of real estate and you go into crypto. In fact, that's one of our sayings in our communities. We want to use crypto as a wealth creation tool, and we want to use real estate as a wealth preservation tool. These are just tools. That's all they are. And you got to know how to use the right tool for the right job. And and we're educating real estate guys, entrepreneurs over on this side on how crypto works, how you can create wealth from it, how you can create passive income. We're also educating the crypto guys, like, hey guys, real estate's pretty cool. Once you make all that money, where are you going to put it? In your bank? That sucks, bro. Like, you can't keep it in crypto. The problem with crypto is in the bear market, you lose 75 to 99% of your economic value when you compare it against the dollar. So you don't keep it in crypto in the bear markets. And smart money in crypto doesn't. Now, new money, they always come in and buy the tops of the bull runs, but smart money's already exiting. And what do? They don't do anything. They need to learn how to preserve that wealth, the wealth preservation process, whether it be, and that's through real world assets, mainly real estate. I come from real estate. I still love real estate, and I'm going to go back into real estate in the end of 2025. when I'm exiting out of the crypto markets, I'm going to be looking for syndication deals, funds. I'm going to be placing my money strategically with right operators.
Got it. So again, comparing this to the real world. So in the real world, people who want to invest in, say, like a fund, right? They're a doctor, they're a lawyer, they got some cash, they want to invest. They don't go and learn all the stock trading stuff, right? They go to a financial advisor. They go to a stock broker, and then that person places that money for them using their knowledge.
Yep.
Is there a person like that in the crypto world?
So you literally almost 100% labeled us, almost, except for we're not financial advisors. We're more like, here's how our attorney put it. He's like, hey, Corey and Dane, if you could be just a fly on Warren Buffett's wall in his office, and just listen in and see what he's doing, see what he's buying, see what he's selling, do you think you can make money? It's like, of course, he's not giving you financial advice, but you're seeing and hearing everything that's going on. That's how we treat our masterminds. So like they come in, so the guys come in, they're almost all of them are entrepreneurs. Most of them are real estate guys. They come in, they don't want to spend the 10,000 hours to learn this. You're right. It's a lot. Whether you're doing stocks, you're doing, I don't care, bonds, real estate. Your real estate's a good example. If you're stay in your lane, keep crushing the world over here, but then leverage someone else's expertise to have some exposure and some diversification over here. And whether it be like we talked earlier, would it be 1%, 5%, 10%, whatever your risk profile is or your risk appetite is, and that's perfectly fine. It's different for everybody, and everyone's in a different financial situation. But everyone should have a little bit, especially if you're doing well in life, you have a good business, you're making money. It's great to have all that money in real estate. It's great to have some of that money in stocks, and it's great to have some of that money in crypto and leverage someone else's expertise on that exposure. You hit the nail on the head.
So let's say I had 50,000 and I'm like, Corey, help me place this money. Like, what would you say? Like, what would be a good approach? Would you diversify it in a couple of the different projects that you are working on?
Yep.
Like, what would that look like?
Would. First, we'd have a conversation to see what kind of your goals are, where you at, financially, and what you're trying to get to with that 50,000. What's your risk appetite? How do you want to be in more conservative stuff in crypto, where maybe you only get a 5, 10, 20x max, or do you want a little bit more of the riskier stuff that can go, 100x, 1000x, 10,000x? Like, it's ridiculous how high this stuff goes, but then you're playing more the risk game of that, the volatility. It could go down a lot more too, right? And we'll find out where you stand in that. And we like to tell everyone to at least I have what's called the 90-10 portfolio. So 90% of my crypto assets are in what's called core assets, stuff that doesn't shoot up overnight, but it also doesn't shoot down overnight. I can wake up and I'm like, oh, I'm up 5%. Great. Oh, I'm down 5%. That's the 90% of my portfolio. Now we're in new blockchains. So when the bull run really gets started, this stuff could really start moving still. But then I take 10% of my portfolio, and this is my crypto portfolio, and that's gonna be different for everybody. Then that 10% goes into more speculative plays like meme coins, like stuff that's just, high risk, high yield, stuff like that. And we need to have that conversation before we start carving out your portfolio. Some guys are just like, hey man, put me in the core assets, and I don't ever want to look at anything. Just tell me when to sell. It's like, okay, let's build out we'll go that direction. A very conservative approach, but at least you have some exposure to have, maybe 10, 20, maybe even a 50x on those core assets. Not everyone's looking for the 100, 500,000x, but it happens. We had a guy in our community, he came in, he loves the meme coins. We found this new meme coin launching. He came in, he was with us maybe for a week, and he put 3K. The meme coin was called Icarus. And guys, don't go buy Icarus now. It's not like, it might be a good buy still, but you're not going to get these kind of gains. If it launched, me and Dane were on a plane. I remember this. And I was like, I couldn't go buy it because I was on a plane. But Eric did. Eric was the community member, and he put 3K in, and 5 days later, it was worth $400,000, and that was off a meme coin. Yeah, and so your core blue chips won't do that. You're not gonna have 3K into 400 grand in 5 days. Now you might have 3K into 400 grand over the entirety of the cycle, over the next 12 to 18 months, but not in 5 days. That's a meme coin play. But he also could have put that $3,000 in, and it could have been worth like $300 or even $30 5 days later. So that's the risk there. And he was willing to risk that 3K, and I don't know what the rest of his portfolio, I can't remember anymore, on his portfolio build out, what was his allocation for blue chips or core assets, but he had some money. I know that he had just sold a trucking company. He sold a trucking company. He was also flipping houses, which is how we end up, all our guys come in, because they usually have some touch into real estate somewhere. And yeah, he was looking for some diversification in crypto. And man, that's probably one of our biggest winners as far as meme coins are concerned. It's like crazy. 5 days.
That's insane.
Yeah.
Wow. I mean, there's so many opportunities here, and who knows where it's going to go. But when you talk about, like you said, there's like these historical changes that are happening in society that are now accepting, and governments are talking about it. Like you said, the stock market hasn't really moved into it yet. So this is a huge opportunity for people.
Yeah.
We could talk for hours, right? And you do, like you have a podcast, right? Or I see you stream from time to time.
We have a show. Yeah. Monday through Friday. Now so that show is designed for it's front facing the crypto community. So remember, we're educating the crypto guys about real estate, about how trusts work, and all the things that we need for legacy wealth, to lock in that wealth. But if you're a real estate guy and you don't know anything about crypto, and you come over and watch that show, you're going to be like lost in the sauce, because it's all crypto talk and talking about projects and protocols and all this stuff. So I love the show, but it's front facing for crypto guys. I do want to say this real quick before we kind of wind down. I do believe cryptocurrency, it solves a problem for humanity. Right now we work hard for our money. We go out, we do deals. Some people have 9-to-5s. Like, we have businesses, and we put that money in our bank, or maybe we reinvest it into real estate, all while the government is printing more money. What does that printing of more money do? Well, it takes the value away of the money that we're holding. It even takes the value away if you're holding that money in real estate. Now, real estate, you can beat inflation, but it's not, in my opinion, the best inflation hedge, unless you're doing, if you counted all the capital gains tax that you save on it. And yeah, that's another story, but you're literally getting robbed every day by the government, who keeps printing the money to oblivion. And who gets that printed money? Well, it's all the people who are closest to the money printer. It's not us. We don't get any of it. It's all the banks. It's all the systems, the WTF, those guys. And all while, we're getting crushed. And so we need a better system. And Satoshi Nakamoto saw that in 2009, when the last banking collapse happened and the real estate collapse happened. He saw that, and he's like, there has to be a better way. There has to be a better monetary system for the people, not one that the government controls, and then they can just steal from us from right under our nose. And so he created Bitcoin. And what was great about that is that it was permissionless, peer-to-peer resistant transactions. Listen to the word permissionless. Nothing in our life is permissionless. If I take my wife out tonight for dinner and I pay with a credit card, it requires a permission from my bank to use the money. Now, it always goes through because I have money there, but it's still a permission. My brother, he sent me money Sunday night. It was like 3 weeks ago. Sunday night, like at 1 a.m., he sent me $20,000 of Pulse on the Pulse Chain Network from Arizona to Puerto Rico. I received it in about 5 seconds. There was no permission. I didn't need no permission from nobody. He didn't either. It was censorship resistant. And that's a beautiful thing. That's a beautiful thing. And you learn to have self-sovereignty with this stuff. You learn to be your own bank. And this is where I feel like true freedom, when there's going to be a war one day, and I don't know when, between the government form of cryptocurrency, of CBDCs, and then true decentralized finance. They're going to clash. And if you want your freedom, you have to be in decentralized finance, for freedom, because if you're under their control, I mean, they could turn your money off and on whenever they want. And so it's a scary world, a scary future. So besides making money here, I feel like it is the future. It solves a problem for humanity. I want to make sure that my kids have these tools and they understand this, and then they do. I've taught my 14-year-old, she understands, my wife understands it, and I'll be teaching my 3-year-old too. Maybe as they're making their allowance, they're getting their $2 a week. Okay, let's go buy a little crypto with half of that, and here's how we're going to use the blockchain. It's just great education for them, because the world's gonna be different when they're my age. Man, I'm 40. I'm almost 48. I'll be 48 in January. Like, when they're my age, it's going to be a different world, man. I remember when these things didn't exist. To think that everything in our lives have gone digital, just like this podcast we're doing right now, but our money has not, is crazy. It's coming.
Absolutely. So if people are interested in looking at your community, if they're interested in learning about blockchain and crypto, and they want to go learn and potentially even join the DeFi Crypto Alliance, how do they do that?
Hit me up on social medias. It's always the best. You can, Corey Geary is what I am on Facebook, Corey, Geary, Geary. On Instagram, it's the Corey Geary. So you can DM me. It's me, always answers my DMs. You could also go to DeFiCashflowSystems.com. That's one of our websites, so you can kind of go see what we're about a little bit more, kind of learn without having to talk to me. But if you want to inquire, and even get on like a Zoom call and talk about your goals and what you're trying to do, I'm more than happy to do that. We want to help as many entrepreneurs as possible. Just have, like I said, just a little exposure, a little diversification, and help change their lives with this asset class. They don't have to go all in like we have, but a little bit goes a long ways.
Awesome, man. Well, Corey, thank you for taking the time. This has been very educational.
Yep.
I think I have way more questions than I do answers at this point, which
we can do a round two, a few months down the road.
Absolutely. And you guys go check out Corey's stuff. He's doing some really cool things. I did get a chance to check out one of his podcasts, and he's totally right. Like, it was just a lot of like crypto talk, but that's why I have him here, right? Is so we can learn more about this as a community, as an audience. But so go check it out. Corey, thanks again for taking the time, buddy. Really appreciate it.
Thank you so much, man.
We'll see you next time.
See ya.
That's a wrap on today's Real Estate Revelations. Thank you for tuning into the REI Hacker Podcast. Remember, every property has a story, and every deal is a lesson. Until next time, keep hacking the real estate world.